it's the second video of the two-part series of how to trade the double bottom. So if you haven't watched the first video on how to identify the double bottom, please shut this one off, then watch the first one first and then come back to this one. If you have watched the first video, then you're in the right place. So everything's the same here. We've got the same pattern. I've just decreased the thickness of these lines so you can see a little bit better what we're doing, because we need to reference a few price points. But before we even get into that, what I need you to do is just load up one of these two indicators onto your chart. You don't need both of them, but if you're using you only need one of them. So if you're using MT4 or MT5 or any other software that has the momentum indicator, please load it up and change the setting to 14. And if you haven't got that, not to worry, use the stochastics indicator, which is just as good, and change the setting to 53.3. So the percentage K has to be 50 and the other two period have to be 3. Okay, that's done. So what we've got here is a double bottom pattern with swing number 1 and swing number 2 and its neckline. So as soon as swing number 2 is being formed, it's time to start getting ready, right? So you don't really know where this uptrend is going to go. It could just continue another move down. You don't know. But what you do know is that if it does break this neckline here, that there's a very good chance of a double bottom being formed, okay? So one of the things you need to do in order to get ready is identify the top of the downtrend at which your double bottom is being formed, okay? So this is the downtrend, okay? And this is where the double bottom is being formed. So the top of that, I'm just going to delete this, the top of that downtrend is here. So you need to go into one of your indicators, and don't worry, I'm going to demonstrate what to do on both. Just simply, I mean, you don't need to do this maybe to start with, but just it's easier. Just draw a nice line, vertical line, that identifies the top of your downtrend, i.e. where your downtrend began, in your momentum indicator or your stochastics indicator, and you can see that it's very much mirrored in both. So all you need to do then is draw a trend line across that connects the bounces either in the momentum indicator or in the stochastics indicator. Okay, now that is the let's talk about the momentum indicator for a second. That's the top of the trend in the momentum indicator. That is the bottom, okay? But because we've got bounces here that don't actually reach the bottom, it's fine. You just draw those, because you can see from this point on the momentum indicator has increased, okay? And what we're looking for is the break of that trend line, okay? If, for example, you ignore these two bounces here and that's the same bottom there, you're looking for a break here. But in this instance, make sure that you include those very near, very close bounces in this little area, because you will suffer from trading a lot of fake double bottoms. So you do the same in the stochastics indicator. That's the top, that's the bottom, and just make sure that your trend line, in fact here, make sure that your trend line connects all the bounces that go all the way down to the bottom of that of the stochastics indicator. And what you're looking for is the break of the trend line here. Now the break of that trend line is important. There's a reason why I talk about it. One thing I've mentioned before is that the double bottoms, when people trade double bottoms, they tend to just trade them when they see them, and that's completely incorrect. You can't trade them all the time. There's a lot of fake double bottoms, and you know when they're not fake the only way that you know that they're not fake is when they break that trend line in either the momentum indicator or the stochastics indicator, okay? If the momentum indicator did not break, let's just say for the sake of the argument that this was our trend line, okay, and the double bottom broke out here, but it didn't break the actual the sloping trend line in the momentum indicator, you don't trade it, okay? Same in stochastics. If for some reason that was our trend line and the double bottom didn't break that trend line in the stochastics indicator, don't trade it. You only trade it if it breaks those trend lines, okay, that connect the bounces of the indicators themselves. So we've got our break in one of our indicators, and we also have, in fact, I'm just going to zoom in a little bit here now, and we've got a break of the neckline here. So the break of the neckline is where you place your entry, so that'll be around here. If you want to be extra safe, then you wait for the price to close over that, over the neckline, which is this candle here, okay? But what I normally do is just, or what we normally do in fact, is place a buy right here, because I've got my confirmation that the trend line has been broken. I've got my two swings and it's broken, and it looks like a very positive signal that a double bottom will place. But it's completely up to you which way you want to trade it, either on the close or on the break. So the next thing we need to do is just simply figure out what our profit target is, and the profit target is the equal distance between the top of the neckline and the bottom of the swing here. Okay, now I'm not going to go right to the top because I don't want to be greedy. So what I'm going to do is just take this a few pips below the neckline, and instead of going to the furthest swing, I'm going to go to the first swing, which is right here. Okay, and just take it up a couple of pips. So if I do that in terms of measurement, I'm just going to move it out the way. I've got a profit target of 4,211 pips. So let's say 4,200. What I do, I keep my cursor there and I'll go up, and 4,200 is 133,839. So I'm just gonna 133,839. Okay, and you can see that this is my profit target here. Okay, so your ratio is pretty much 1 to 1. Okay, now that means that your stop has to be slightly above. Okay, if you want to trade this particular swing, you can do, but your stop also has to be down there as well. So just remember, I try to keep a lot safer in my trading, so I always trade the lowest swing so that I can just get in and out as quickly as I can. And you can see, soon as if I place my buy here, that trade literally shot up straight away, and I would have made my 4,000 pips in just 2 days. You know, and if you're trading $1 or £1 per trade, that's £4,000 or $4,000 in 2 days. You can't beat it. And your stop loss, I'm just going to draw another line. So mine would be here, okay? But if you're trading this swing, your stop loss is just below here. So just a few pips below the lowest low of the swing, okay? So I'm just going to move mine up because I want to stick to my original plan. So my stop loss will be just a few pips below that first swing, okay? So that's how you trade it. Make sure that you've got your break of trend line in your indicator, whether it's the momentum indicator or the stochastics indicator. Once your second swing is formed, if you have a break of that of the neckline, place the buy there, and then trade 1-to-1 ratio in terms of your profit target, which equates to about here in this particular example. And your stop loss has to be just a few pips below the shortest swing shortest swing that creates the double bottom pattern. Okay, so that's it, guys. I shall see you for the next video.